Welcome everyone to Daily Rates Live with the Mortgage Calculator. Today we will be discussing HELOANs, so a specific version of the second mortgage. So just give us a few minutes to get live on all the platforms. If you do tune in, feel free to drop a comment there in the chat. And if you have any questions, please drop it in the chat and we'll definitely go over those at the end of the show here. So just give us a few minutes to go live on all the different platforms and we'll get started in a minute. All right, thank you everybody for tuning in. Good morning, Owen, Melvin, Chris, Nicole. Give a few more seconds for everybody to get connected. We are live on YouTube, Instagram, LinkedIn, Facebook. And good morning, Warren, Bob. All right, looks like we are live on most of the platforms. So let's go ahead and get started. If you have any questions, please drop them in the comments there and we'll get to them once we go through the presentation. So welcome everyone. My name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a correspondent lender that specializes in non-QM loans, which is one of our topics for today. So today we will go through the live mortgage rates as we do every morning, and then we'll have Jose Gonzalez, our sales manager with 28 years of experience, go into a deep dive into a pretty new product that's really popular out there, the HELOAN, which would be the fixed rate second mortgage, essentially. So definitely a newer product. Definitely want all of our team to understand it. And anybody out there wondering the difference between a HELOC and a HELOAN, we'll get into that. But first, let me go ahead and switch my screen and get into the regular rates for today. All right, this is our pricing tool for our team of mortgage professionals. This will show us the rates for today. It is November 2nd, just after 11 a.m. Had some big announcements yesterday with the Fed. Believe it has swung in our favor here, so we should have some improvement, we're hoping, here today. But this tool will show us the general APR. If you'd like a full breakdown of all the fees, itemized loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose DSCR loans we love to do in 44 states. For our demo, as we do every morning, we'll set up a standard scenario so we can compare the APR across the programs. So for all the demos, we'll set a standard loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. We're going to look for the absolute lowest rate we can offer legally, since the rates are a little crazy right now. And we will compare conforming conventional to FHA, and then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard here. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are eligible, just let us know. We'll quote it up, but since not everybody is, we don't do that live here. And same with USDA, that's only for eligible properties. If you do happen to be looking, just let us know. We'll quote it, no problem. We'll start with conforming conventional. We'll do purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's check out the conventional options. All right, definitely some downward movement, right? Yesterday we were up over 7.5 on the APR. Today, the best option, 6.99 rate, 2.25 discount points in cost, puts the final APR at 7.198. So quite a big difference there, almost half a point in cost in one day. That is awesome. So we love to see this downward momentum. Now, if our customer doesn't qualify for a conventional program for any reason, typically the next option we want to check out is FHA. So we'll go to our pricer, we'll set up the same exact scenario so we can compare apples to apples. This time we'll select FHA. Everything else will stay identical here. FHA does allow a little more leniency on credit issues as well as a much higher debt to income ratio, but we'll keep everything the same so we can compare apples to apples here. And it looks like some downward momentum on the FHA, not quite as drastic. Maybe tomorrow it'll be a little more updated or later today. But the best option here for FHA, 6.25 rate, 2.5 discount points and costs. Put the final APR at 6.893. So still a little less than conventional. So our customer that qualifies for both, definitely don't overlook FHA. It could actually be a little bit cheaper, such as this case. And the APR does include the upfront and yearly mortgage insurance. So for our customers that must use it, this APR is the number to look at. This is how we can compare across the different loan programs. That does include all the costs there. Now, where we love to specialize is if, unfortunately, our customer, for any reason, doesn't qualify for either FHA or conventional. Many other banks or lenders will have to deny that customer, but that's where we love to present our non-QM options. So we have a whole category here for expanded guidelines where we have over 5,000 additional options beyond the standard options that most banks and lenders have. So we'll keep everything else the same, but now we have a new option pop up where we can edit the income. So full doc is what we use for conventional and FHA. So if our customer doesn't qualify with full doc 2 years of tax returns, typically we would choose non-QM here to take advantage of one of the alternatives. We have asset-related programs. We've done shows on that as well. So check out all the different shows on these different topics. Business bank statement. The investor programs are just for investments, so we can't do that here for this demo. Personal bank statement, 12-month is the most popular. That's what we always use here for the demo. We have RSU, stated income, VOE, 1099, P&L, no income, CDFI, all kinds of options. The most common is our personal bank statement, 12-month. And that's for our self-employed borrowers. When our self-employed borrowers submit tax returns, many times they have various write-offs and may not quite qualify or just may need a little bit more income. Therefore, we can solve that problem using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using no tax returns at all, just their cash in the bank. So many times our self-employed borrowers will qualify for much more income using this method. And now let's check out the non-QM options this morning. And as usual, it's a little bit misleading at the top here, but let's look at the realistic options. So the most realistic option here at the top, 8% rate, 2.25 discount points and costs, put the final APR at 8.108. So that's about the same as it was yesterday. Non-QM, one of the advantages is it doesn't swing as drastically as conventional or FHA, but that is the disadvantage here. The news from yesterday hasn't really trickled down to these programs yet. So we should see some improvement in these, hopefully in tomorrow's show, once these all get some updates on them. Now, there's a ton of different options here, so we'll have to see as each one gets updated. If we scroll down the list here, there's dozens, if not hundreds of different variations here. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other credit issues, and some of these may allow alternative methods to calculating the income with the bank statement. So tons of different options. Please get with our team. They'll find which one of these works best. And before we go into our second mortgage options, we always want to do live pricing for investment properties. So we love to work with investors, new investors, seasoned investors. We have some great options here, especially for non-QM. But we'll set up the same scenario, 80% loan, 20% down payment. We'll find the lowest rate we can offer for an investment property, and we'll check out conforming conventional compared to our non-QM expanded guideline options. Remember, FHA, VA, USDA, all the government programs are not for investment properties. So we'll just compare these two here. We'll start with conforming conventional. Everything will stay the same. We've only changed the occupancy here. So we can see the adjustments that conventional has added for investments. the conventionals beating the portfolio again. So, markets are stabilizing. So, the last couple weeks, the portfolio option you see here was for a couple days they're just beating conventional by quite a bit, and now conventional's back to beating it by a hair here. So, best option at the top, 7.499 rate, 3 discount points in cost, put the final APR at 7.732. And our flexible portfolio option, that's not actually a Freddie or Fannie program, but an in-house portfolio option that does create some flexibility, 7.75 rate, 3.25 discount points, puts the final APR at 7.992. So today it's a touch higher. We might see the market stabilize a little bit more on the next episodes. And we'll do our final demo here for investment properties, 80 LTV, 20% down payment. And this time we'll check out our favorite options, our non-QM expanded guideline for investment properties. So the first thing we must select is our income option, most popular income for by far for investments is our DSCR option. That's because it doesn't require any income or employment from the borrower. No documentation on that. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows monthly, that's a ratio of 1.0 or higher. We even have options for properties that don't quite cash flow, where the ratio is under 1.0. For the demo, we always put 1.5 as the highest value the computer looks at, so we can see all the options. And prepayment penalty is the last thing. 3 years is standard on these programs. We can select 0, that will cost more and limit what shows up. We can select 5 years, which does save our borrower some money and does limit what shows up. Since 3 years is standard, this will be the demo option. So let's check out the DSCR rates this morning. Ooh, I think that still beats conventional by a hair. That's amazing. So even with conventional improving quite a bit this morning, this DSCR option at the top, 7.75 rate, 3.5 discount points in cost, 7.900 APR, still beats conventional by a hair today, which is pretty amazing. And we have a ton of different options. If you scroll down here, different variations may allow different credit issues, foreclosures, bankruptcies, may allow different income calculation options. So tons of different options here for our investors. Please get with our team to find the best ones. And now let me switch my screen again, and we'll get into today's topic. Which there is a DSCR version of this, but I don't know if Jose has that pulled up. That is quite the tricky edition. But let's talk about HELOANS. So HELOANS is our last couple episodes were about HELOCs and other variations. HELOAN would be a fixed rate second mortgage. So basically, variation of the HELOC where we're not going off variable type of rates or draw periods or interest only or any of the other sometimes advantages to a HELOC, or you could consider disadvantages in other cases. So, Jose, if you're ready, let's go ahead and introduce these examples and just make sure you let everybody know the difference here on the HELOCs versus HELOANs.
Good morning, everybody. Thank you for joining us for Daily Rates Live. Great to be with you this morning. Yes, last night's training, we had an interesting training on a very unique product that we have, which is a fixed rate HELOC, which is fixed during the draw period. It's fixed for the draw. So each draw remains fixed. However, it is still an open-ended product, which is the trait that a HELOC is, meaning you pay interest directly on what you owe, as opposed to a closed-end product, which is what the HELOAN is. It's a closed-end product with a set amortization, right? You pay interest according to the amortization table. You pay down the loan, your payment remains the same versus the HELOC. Obviously, the HELOAN is a fixed rate product. The HELOC traditionally is a variable rate product, except for the one that we're offering, which the rate remains fixed on the amount that you withdrew for that time. And then it may, in the next draw, the rate will be whatever it is at that moment for that draw. So what we're talking about, regular HELOC is variable, HELOAN fixed rate. HELOANs are all the rage now because, as we went over in last night's training, there are a lot of borrowers that took advantage of refinancing their loans during the previous cycle when we had historically the lowest rates we've ever had. And many of those borrowers may be in a position now, their equity has increased, they want to do some additional investments, maybe consolidate debt, whatever it is that may be the objective to get the money, but they want to get the money out, but they do not want to touch that first mortgage, which could be at as low as 2.5% interest rate. Hence the HELOANs have become a very popular tool to access the equity due to their fixed rate nature, due to the fact that they have multiple income streams as well. They're very investor friendly because they allow us to not only go full doc on investment properties, but they also allow bank statement income, profit and loss income, and DSCR income, of which I do have an example for you all today. Now, obviously, what you will have to note when you are structuring your deals that the different income types usually will have different loan to values. So if you are trying to structure the deal, you're not getting any options, play with the loan to value, and assuming everything else is in line, credit score and all those kind of things, you should get some good options. Uh, so the main use of the HELOANs is as a cash out. So here I have some cash out options for you. Maximum LTV is 90% on the HELOAN. That is one of the differences between the HELOAN and the HELOC, that we do have HELOC options, which will let you go up to 95%, and in some cases, even 97% on a purchase. But those would be for conventional loans, assuming that the CLTV maximum, the first, allows you to go up to a 95 or a 97. So here, HELOANs, 90% is the max LTV. So on our first option here, it is a primary cash out, full doc, and you will note, and this is 90%, again, I did mention, 12.375 actually is giving us a little bit of a lender credit, and you can buy this down to 11.125% for our full doc option. So now we have a primary bank statement option. You will note now, like I was mentioning, LTV drops a little bit to 85%. Rate actually is a little bit better, 12.25, same lender credit, but the previous one at a 90 was it 12.375. So drops a little bit the rate, but again, we're at 85% LTV, but again, we're also bank statements. And this one, you can actually buy it down to 10.875. So pretty cool there with our bank statement HELOAN option. And then getting even more interesting is our profit and loss cash out option. Now, you also have to note that some of these options have a minimum loan amount. So, for example, for this one, in order to get a viable option, I had to play around a little bit with my loan amount. So my minimum loan amount is 125,000 on the second. So I dropped my first to 300,000 so that I would have my 85% LTV. P&L obviously a little bit riskier. Hence, you note higher rate. Remember, higher risk equals higher rate in the interest rate world. So 13% lowest cost option, and you can buy that down to 12.75%. So now I have a couple of investment options for you, right? I'm jumping right to the bank statement option here. Now, max LTV on this is 80% with the bank statement option. You will note, still rates are pretty good. You're looking at 13% here as your lowest cost option, and you can buy that down to 12.125% for our bank statement and investment property, 80% LTV, right? So now saving the best for last is our HELOAN DSCR option. Now, mind you, yes, 65% is the max LTV, but when you consider that our best case scenario DSCR cash out on a first mortgage is 80% with a 720 or above credit score for a one unit property. And that's a very select program, right? It's not so bad when you're considering we're in second position here, DSCR at 85, excuse me, 65%. So when you put it into perspective, that 80% LTV is the outlier program. Everybody else really is at 75%. Like 99% of the options are at 75% LTV cash out max. So when you put it into perspective, 65% is pretty good, especially an investor that had that property for a long time, has a real choice mortgage on the first, doesn't want to touch it. So this is a way to access some money. And our lowest cost option is 13.375. So comparing that to our bank statement and P&L, it's pretty close. 13.375, and you can buy that down to 11.5%. But remember, team, maximum LTV 65%, and I did run this one with $125,000 loan amount. So if you aren't getting any options and you meet the credit score requirements, meet the LTV requirements, play a little bit with your loan amounts to see if you get a viable option. And all of these are definitely compliant rates.
All right. Well, that's a good intro to this question here. We did have a question come in while I was doing my part, so let me take that real quick here. If anybody has any questions on the HELOANs, please drop them before we wrap up. Don't know who Rock and Rolla is, but why do you use desired price as 96.5 instead of 0? So that's what Jose is mentioning, is we need to not mislead anybody here watching the show. And we can offer rates sometimes in different ways, but we have to cap it at what will be the maximum. So 96.5 is for investment properties, meaning we're going to find the best rate at 3.5 discount points, which is the max that we want to show to a customer for compliance reason, as Jose just mentioned. Now, if you get some seller credits or some lender credits or any, you can play with those numbers. But since we're doing the live show and just speaking in generalities, we want to show the lowest rate at for investment properties at 3.5 discount points in cost. And then you noticed when I did the primary home examples, I did a 2.5 discount max. So I don't want to go over that because anything over that may not be compliant. So we don't want to mislead anybody, because obviously we can show a rate sheet that has, gigantic cost, but that wouldn't be legal to offer a customer. Even if they wanted to do, get a 5% rate, it would cost, tens of thousands of dollars, tens of points, which would exceed the maximum amount. So great question, but that's why we do the live show. We show the lowest possible scenario using, general setup, which is what we do in the pricing example. And perfect. Now we have a question for you, Jose. Does the DSCR HELOAN have a DSCR ratio requirement? Of
Yes, sir.
course.
Well, there's two options. There's one for 1.25 and above, and there's one for 1.0 to 1.25. Now, I will tell you that the difference in the cost for that extra 0.25 in DSCR, which is obviously a much less or a less risky property to loan on, it's a 1 point difference in cost. So the rate that I showed you all was the 1.0 DSCR at 2 point. It was 13.375 at 2.084 points, and if you are 1.25 or above, the same rate costs you 1.084 points. So
So you use the worst
yes,
case, not the best
right.
case. Okay. Usually use the best case, Jose. Come on.
So we do have two options there, but minimum 1.0.
Yes, and that will take both mortgages, the full payment into account, correct? The DSCR on the whole shebang.
Correct.
So, uh, not just the second mortgage, right? We need the whole property to cash
Correct.
flow,
Yeah.
right? So just make sure you calculate that properly there, Jason. All right, looks like we don't have any more questions. If anybody does, feel free to email us. Jose is happy to answer these questions on these tricky products, or please get with one of our team members. We have over 400 licensed loan officers with access to all the info on the HELOANs, and they can quote it just like Jose did in a couple minutes. We did have a question come in from Bob. Yeah, Bob. Bob was asking if we'll have a training on the 5-day instant HELOC that's so popular. We mentioned that last night in the training, and we will continue to mention that as well. So that is the special HELOC option. We didn't talk about that today, but we did talk about that yesterday in the training. So yes, continue to tune in. We'll continue to bring up these new products as they come to market. As Jose mentioned, that DSCR is only about 2 months old, right? Didn't even exist 2 months ago. There was no such thing as a second mortgage DSCR. And now there is, right, as of 2 months ago. So we try to do this show to inform, our team, the public, everybody out there when these new products come out. And we will do some more episodes here next week. And we do have one more episode tomorrow, 11 a.m. Eastern. We do this show every morning, go through the live rates. Hopefully we have some good rates tomorrow as well with all this good news for the mortgage markets. So we will be excited to check that out tomorrow. So thank you, Jose, and we'll see everybody at 11 a.m. tomorrow. Thanks.
Thank you, everybody.